Hello everyone, it is Evan here from the Trade Risk on Thursday, July 15th, 2021. Usually record these videos on Wednesday, had a very busy day, couldn't get to it yesterday, so apologies for that, but we are back here on Thursday with some trade ideas for you like we bring you every single week. These trade ideas are based on specific technical, sometimes discretionary and quantitative criteria, all of which we break down for you as we discuss each idea. And as always, these videos are sponsored by our good friends and partners over at Investors Business Daily. We curate all of our long ideas using the stocks from their stock lists. You can get access to those stock lists with a link in the description of this video. So I wanted to touch on the broad market here, and we are, of course, going to do our long form market analysis video tomorrow. So every Friday we do our long form deep dive on kind of the current state of the market. So I'm not going to go super in depth here, but I do want to touch upon sort of the market cap weighted indices here. So if we look at the S&P 500, you can see that we're finally starting to see just some short-term cracks appearing here in the S&P 500. Now, the S&P is a market cap weighted index, and there are, essentially 5-6 stocks, and you know what these stocks are, that have been in strong uptrends, and they have been masking a lot of the selling pressure that we've seen in other areas of the market. So growth stocks, smaller cap stocks, a lot of the, inflation trade type of names also have been getting beaten up, and we haven't really seen any change in the S&P 500. It's been grinding higher, but we're finally starting to see a little bit of a crack today. So what I want to highlight here is just, if we're looking at the S&P 500, you can basically see we had this little 3-day high here, or 3-day range here, that just went sideways, traded basically overlapping bars, and then we're starting to get the breakdown here today. Notice this was kind of the last breakout area here, was around 43.60. So we kind of topped out here in on July 7th, pulled back, had this pretty strong pivot, this little trampoline bounce where we kind of broke above it, closed at new highs, and then just pushed sideways, and now we're failing at those highs. So in the very, very short term, if you're a short-term trader, if you're looking at this market over a multi-day period, 43.60 or so, that's a good pivot level here. Just generally speaking, on a closing basis, you'd want to see this market back above. In fact, you could even use Wednesday's lows. So if you want to cheat this up a little bit, 43.62, you could argue that, as long as we're staying below Wednesday's lows here, below this breakout level, you just want to be a little more cautious in the short term, or at least just be open to the idea that we could trade down all the way back to the lower, at least the lower 4300s, if not retest this pivot. Not saying that has to happen, but if we start and if we continue to kind of close below here, then it certainly opens up just moving back into this old range. So that's kind of a trade idea in itself here for a short-term opportunity. If you are tactical, if you're looking at a couple of multi-day, hedges or just a directional sell, short sell, then maybe the S&P looks kind of ripe right now. I don't want to get overly pessimistic on this market yet. I mean, again, if we just zoom out here, we are, less than 1% from all-time highs, right? We've been in a strong uptrend. There's lots of structure underneath here. I mean, I don't see, I'm not calling for or even predicting or thinking that we correct into some huge bear market or anything substantial at this point, just not seeing it. But that is, kind of in a short-term sense, we can see some more downward pressure. Longer term, everything is very much intact. If we look at the Qs, you can see kind of the same thing here. Again, this has been grinding higher. This has been the leadership in the market until kind of today now, where some of that momentum, some of the wind is coming out of that bull sail. If we look here at maybe 363, that's kind of the level where if we're closing below it, then, be a little more cautious, at least in the short term, or at least be open to the idea that we come back down, retest, 355 or so for a few more days. So keep that in mind. That's what I'm looking at there on the major indices. The Russell 2000, of course, has been the brunt of the selling here. This is where you're actually seeing a more meaningful kind of pullback. We're about 8% from highs now, and this is where you're getting just a lot more uncertainty and selling pressure. If we look at a weekly time frame here, you can see that not a whole lot has changed yet. So structurally, we're still moving sideways, but we are getting back down to the lower end of this range. We've beaten against this range a few times in the past. More we do that, more likely that we ultimately break. Don't necessarily think we're going to break at this time, but I do think, maybe a swoosh back down to this 208 and kind of check everyone's gut down here to see how the risk appetite is feeling in about the 210 area seems reasonable at this point. Seems like we could get a nice little push down there and just kind of check out how everyone's feeling and see if the dip buyers are going to step back in at the lower end of this range. So that's it. That's kind of the market take here on what we're looking at. And obviously this video is about individual trade ideas. So I got 4 of them I want to look at today. One bearish, one bullish, and I think 2 kind of consolidations that could go either way. So let's jump right in. So the first one is DHR. I think you know which one this one is. This is the bullish idea. This is a stock chart that looks like nothing else that we just looked at. This is completely in its own universe, trending higher and ignoring everything that's going on in the broad market. Take a look at the bullish engulfing bar today and a breakout to new highs. So I think this is hitting multiple of our TC2000 scans. It's definitely hitting our bullish engulfing bar here today, as we saw it open below yesterday's body and we are rallying above. In fact, it's kind of engulfing 4, 5, 6 days all at once right now, and it is looking to close at new highs. So DHR, very, very strong here, ignoring the market weakness and short-term kind of breakout pattern to new highs. If we want to switch gears now to the more sort of bearish idea, we look at ALXN. I don't know if there's news on this one. I'm sure there is with the pickup in volume over the past few days, and we're seeing a pretty good thrust off of these highs here. So we had this kind of gap down to start the session, and now we're proceeding to just sell off throughout the session as well. This is hitting our high volume week close scan, so it's looking for just large moves on heavy volume above average range, and that's what this scan looks for. It's called, our bullish one is heavy volume strong close, bearish, and then I'm not sure the exact naming, large range week close is the bearish scan, and that's what this one's hitting right now. So this one, again, clearly you can see starting to break trend. It's been in a very healthy uptrend here, right? But we're starting to lose, and today is kind of the change of character day, and we've had a couple of high volume sessions as well. So ALXN, that's your bearish idea. If we move to some consolidations I wanted to bring up. So the first is Masco, MAS. And this one here would be a glass half full consolidation to me if it can actually get its act together in this area, but still just needs to wait and see and prove itself. So if we look at this stock here, you can see it's had this very long range that it was in for about 8 months or so. Second half of 2020 into the first quarter of 2021, we got the breakout above this level. So we had kind of this bit of a consolidation that looks, I don't know, something like this. You can draw your trend lines as you see fit, as this makes sense, but essentially this tightening pattern here, we had the breakout, we got as high as about $67, $68, and now we're pulling back to where we broke out from. So we're kind of back at the scene of the crime right now, and we are consolidating. So this is hitting our ultimate consolidation scan, our short-term ultimate consolidation scan, and it's kind of occurring at an interesting spot here. So what I'm interested in seeing is just kind of how this ends up resolving itself. If this can, continue to go sideways here and then lift back up, this could be an interesting opportunity here to kind of get back involved in this stock for a breakout, for trend continuation, so on and so forth. So MAS needs to prove itself. There's no trade right now, just something to keep on the old watch list. And last but not least is AKAM. So Akamai here is also hitting our ultimate consolidation scan, just our short-term ultimate consolidation scan. And if we zoom out, I mean, there's also kind of this very big consolidation that has been taking place. But notice Akamai here has been range bound for the past year or so. It's been topping out approximately at this area, about 120. And that's, again, what makes this interesting. Is always very interesting when you have a kind of near-term consolidation or a pattern taking place at an interesting spot in terms of price action and, supply demand, support resistance. So in this case, we're at the top end of the range and we're carving out this short-term consolidation. So now I want to pay attention to this. Are we ultimately going to kind of fail up here again, roll over and come back down into this old range, back into the lower hundreds? Or is it go time and we're going to finally break out and move out of this short-term consolidation and this year-long consolidation to the upside over 120? That's what we want to pay attention to. And of course, we got earnings season coming up. So again, that's something we have to always keep in mind with lots of these stocks and stocks that are consolidating. Sometimes the catalyst is in fact earnings. So you have to keep that in mind. And I think for Akamai, it's not until early August. So there's a few more weeks here to see how this hangs out. But that's it. That's kind of what I have going on today. Lots of waiting and seeing how a lot of this action plays itself out. Again, we do have earnings season that we are going to start ramping up on in terms of the tech stocks, growth stocks, and that'll certainly be interesting to see how the market starts to take those earnings and digest them and see how stocks move. So I think a lot of us are waiting on that. And right now we've got, again, some of those market cap weighted indices that are finally starting to show some cracks. So that's what I have for this week. Leave a comment below. Let me know what you're looking at, what trade idea stands out to you, or any other market play that you're putting on or thinking about. Love to hear what traders are looking at. So thanks so much, as always, for tuning in. We usually do these every Wednesday. Today was Thursday, but you can subscribe to our YouTube channel to always stay up to date, just in case we do miss a video or we miss a date. Stay up to date, subscribe to the channel, or follow us at thetraderisk.com. We'll see you back here tomorrow for our long form market analysis video. Take care.